Well, let's get straight to some macro data then. The industrial output in November has slumped to its lowest levels we've seen in the past 17 months. Growth came in at around 0.5%, and this is against a CNBC-TV18 poll, which expected a figure of around 3.8% odd. The fall in growth was secular across various sectors. Manufacturing output saw a contraction of around 0.4% after clocking nearly around an 8% growth in the month of October. Capital goods as well was the worst culprit. Growth contracted by over 3% compares to a robust 17% number that we saw in October. Latha Venkatesh joins in now. Latha, we had a bit of a slowdown, but this is dismal at around 17-month lows.
Yes, this is an unexpectedly large slowdown that we are seeing in the November industrial output numbers compared to our poll of 3.8% and compared to the actual October performance of 8.1%. Just a 0.5% is a shocker. Part of it can be explained by the fact that October had seen a lot of production stocking because of the festival season, and therefore, there is usually a lumpiness about this number. Also, the base is very high. November of 2017 was a very strong month, and therefore, as a consequence, in comparison, this was always expected to be slow. There were also debt market problems. Because NBFCs were not being trusted with money by the mutual funds, they were not able to provide money for truck operators, MSMEs, even consumers. A lot of consumer finance happens because of NBFCs. All that had slowed. So that explains perhaps you have a contraction in consumption of about 0.9%. You have a contraction in capital goods of about 3.5%, contraction in intermediate goods about minus 4.5%. Across the board slowdown. Clearly, some of it can be explained by the debt problems, but a large part of it comes as a shock. The chances are that people will be revising the GDP number even lower. Also, this number can to some extent move the MPC when it meets in the first week of February. If the inflation number that comes on Monday also turns out to be something like 2% or 2.2% thereabouts, then chances are the market will start expecting a rate cut from the Reserve Bank in the first week of February.
All right, thanks a lot, Latha, for this. But both retail and wholesale inflation numbers will be released today, and Ekta is here with what to expect. Ekta, good morning.
Well, I'll start with the more important CPI data. So the CPI data for the month of December is expected to soften. So it's expected to come in at around 2.26%, which compares to 2.33% on a month-on-month basis. Now, the range is quite wide. It's anywhere between 1.97 to around 2.9%. And the core inflation, in fact, is expected to soften as well. So 5.4 to 5.6% is the range for core inflation. Compare this to 5.8% in the previous quarter. Now, the reason for the CPI to soften continues to be food prices. So the food and beverage inflation is expected to decline by around 1.5% this time round as well. And remember, this is after a 1.7% fall in inflation and food and beverage inflation in the previous month. So that would be the most important thing to watch out for. However, vegetable prices have now picked up a little bit on a month-on-month basis, particularly for the likes of tomatoes. So the outlook with regards to food inflation would be important from an economist's point of view as well. Petrol, diesel prices softening because of Brent crude, that's probably going to reflect in core inflation, and that's probably why you're going to see that softening coming in on a month-on-month basis. Now, in terms of the WPI, expect similar trends there. So we're expecting a little bit of a softening coming in for WPI. So 4.57% is the poll versus 4.6% on a month-on-month basis. Range again is 4.1 to 5%, and the core inflation is expected to just about be flattish to maybe marginally soften. So 4.7 to 4.9% is the range. This compares to around 4.8%. So expected to be more or less within that band of around 4.8%. So the lower base is likely to have an impact this time around on WPI, but that low base is likely to be offset by a large extent in terms of food prices again for WPI inflation, which is wholesale prices. So again, expect similar trends to take place with regards to food inflation. Core inflation could probably soften to be flat, and the outlook on food inflation would be important.
All right, thanks so much for that, Ekta. Well, time to slip into a short break. Up next, Infosys posted its quarterly earnings on Friday. Key highlights of the earnings when we return. Stay with us.